our radar. Reported their Q3 numbers. The stock initially sold off, was down 3%. Since then, it's recovered a bit, but still down 1.8%. The street is disappointed on three accounts. One, the domestic revenue growth was muted. It declined 1.7% on a quarter-on-quarter basis, but year-on-year, it was only up 5%. Two, the overseas subsidiary clocked in an EBITDA loss. And three, the debt too has seen an increase. Baba Kalyani, the chairman and managing director at Bharat Forge, now is with us on the phone line. Afternoon, and thanks so much for joining in. Could you talk about the domestic revenue growth, sir? 1.7% down quarter on quarter. Year on year, it slowed down to a mid-single digit growth rate of 5%. What is the outlook and what's pressuring the domestic revenues?
Well, as far as the domestic revenue, we are pretty much on track with the industry revenue. Industry revenue has been, almost flat or a little low. So that's what is reflected in our domestic revenue. I think going forward, we should see a fairly good increase in our domestic revenue. That's our projections.
Mr. Kalyani, could you elaborate on that when you're saying you're expecting good growth on the domestic business? Some more color on what the driving factors are going to be as we enter the next financial year. Which segments would you keep your sort of most keen eye on?
Two or three segments. Number one, I think we are doing well on the pass car related businesses domestically, as well as, of course, for exports. So we see growth in that area. We are also seeing a lot of new business in construction equipment, mining equipment, and all the industrial related products. So we see growth happening there. We have recently acquired a casting company called JS Auto, and that is growing at a very fast pace. So we see growth coming there. So we have multiple levers of growth in the domestic market that will help us our domestic revenue.
All right. Hi, Mr. Kalyani. Good afternoon. Nigel on this side, sir. What about the export markets? How are things shaping up out there? And also your overseas operations, they posted an EBITDA loss this time around in your overseas subsidiaries. Do you expect it to turn around in the coming quarters?
First, let me answer your first question. I think on exports, we have had the highest ever export revenue for the quarter at 1,166 crores. And we are quite bullish on the exports even going forward. As far as our overseas subsidiaries are concerned, I had said that last time also that we will take 2 quarters to come out of our issues of ramping up production. All the new orders that we have got, our order books are full in the aluminum business. We are also facing a lot of issues regarding cost inflation, and we have to recover some of these costs from our customers, so that process is going on. But we are very confident that we have a path to profitability for this business in FY24.
So, sir, 2 quarters of overseas EBITDA loss. So Q4 will also see a loss? And will it be higher or lower than what we've seen in Q3?
Much lower.
Okay. And what would be the reason for the EBITDA loss to come down significantly quarter on quarter?
As capacity utilization will go up, number one.
Okay.
Number two, our compensation from our customers for all the energy increases, inflation increases will come in.
Mr. Kalyani, what on the defense side of the business as well? I believe your defense order book stands at just about 1,950 crores. So typically, what's the execution time cycles? As in when does all of this start getting booked in over? Is it Q3, Q4 of next year? And again, just to get back to the top line growth, the domestic business top line growth, with defense kicking in, would you perhaps get back into double-digit growth territory in FY24?
Yeah, that's for sure. We will have if you put defense into it and our JS Auto casting business into it, we'll definitely have a pretty high double-digit growth going into FY24. Number one. Number two, our total defense orders are currently over 2,000 crores. These are all exports, by the way. we are also expecting substantial domestic orders to come in the next few months. But our the execution of these orders will be roughly about 1,100 crores in FY24 and increasing in FY25 and going forward.
Okay, all right. Mr. Kalyani, what about the leverage in the books? You know, debt continues to remain elevated around 2,500 crores. Or do you have any plans of pulling this debt down, maybe a debt reduction strategy?
That's a little bit of an optical problem because the debt that you're seeing in the book is largely the bill discounting debt. We have, in terms of long-term debt, we have 3,000 crores of cash in our books right now. So our long-term debt is much, much lower than the cash that we have. As far as the working capital bill discounting, that is self-liquidating debt. So, you know, we're not too concerned about that. As our exports go up, our export, you know, pipeline in terms of the total time it takes for cash conversion cycle is a little higher than domestic, and that's why you're seeing a higher number there.
Mr. Kalyani, hi. Just one last question. Just last week we got the US Class 8 truck order data, and that shows actually a very steep fall. For the month of January, that number is 21,600. It is down 24% month on month. And of course, I mean, from the highs of September, it is a far cry, less than half. Could you tell us how this will impact business?
Well, you know, first of all, I don't think this has any impact in terms of what happens in production because everybody's order books are more than 1 year full packed. So the impression we have from our customers in US and Europe is that they see a very strong delivery of Class 8 vehicles in 23 and 24. So, and we are seeing the same at our end, and that's how our exports, even in that sector, are increasing quite rapidly.
All right, Mr. Kalyani, we'll leave it there. Good to speak with you as always after results, and hope we can catch up again soon. Thanks very much for your time here on CNBC TV18. Let's stick with the auto space, though. Eicher is the other one which is actually in focus.